let's go ahead. What's going on, Tim? How we doing?
Hey,
Welcome to the show.
well, good to see you, Mitch. Good to see you, Joel. And I'm sorry I missed Dennis. He's out. So our friends tease us because we're on the road all the time, and they turned our name into a verb. They say we've been out quasting,
I
and
like it. I like
I
it.
I see Dennis is out quasting. I don't know where he's headed, but I hope he's headed somewhere fair.
He's on the yearly
And
quest, you know.
You know what? Also, now you got me thinking. You could also use the term like, let's say, Tim comes on, he talks about his stock, and it doesn't turn out so well. You got quasted,
you're
Ooh.
right. There's
right?
that. There's
You,
always
you,
that.
you,
There's the for every action, there's an equal and opposite reaction. So you have to beware of that risk. That's right.
all right, I
And one
want to, Tim,
risk of
before
it, yeah,
yeah, before you get started, I just
sure.
want to go back to your indicators, the market structure, edge,
Yep.
and markets change so quickly, right? Look at the complexion of the market. I mean, just in like when people, to give my perspective on the markets, what happened on Friday, you got to look at perspective of what happened on Wednesday night and Thursday, right? The SPOOs opened Wednesday night at 6 p.m. They traded until Thanksgiving, right before the Lions game at 1 p.m. And we actually came within 20 points of the all-time high, right? We were up.
Interesting.
And then you had the
Okay.
reversal, of course, because of the news. So I know how quickly I can react to my numbers because my numbers are simple. I use daily highs and lows and a couple other things that, help me come up with my analysis. But market structure edge, I mean, you need a couple days to digest this stuff. How does it process the information? And, when are the signals actionable?
Well, we tell people don't buy falling sentiment and avoid the times in the market where you're going to be vulnerable to what machines do. And those are holiday periods when investors are out of the market, earnings when investors may be digesting information, options expirations, month ends. And you had a combination of two of those things here, month end and a holiday. And you have to be aware of those risks. I'll show you what broad market sentiment indicated before that. But I don't like to be in the market during periods where I know that the machines, computerized traders, we call them fast traders, are going to be able to sift the supply demand data and move the market in the direction that they want, because that's what they do. I listened to CNBC most of market hours on Friday, and one person said something relevant, and he generally does. Tom Lee from Fundstrat. He said, the professionals aren't at their desks. This is computerized trading. I wrote on yesterday morning, it was out this morning before the open, that a half day is not a trend, 1 day is not a trend. Investors were not in the market on Friday. You cannot draw logical, long-term, rational conclusions about a market that is dominated by machines that don't want to own anything. That's just illogical and nonsensical. And
Yep.
people who I said in the note that the beginning point, no matter what you're doing, whether it's math, science, medicine, law, education, construction, cattle ranching, or the stock market, the beginning point is to understand how it works. How does it work? Well, everybody, this is a great lesson. It's a great lesson to remind us that the market does not work the way that you think it does. Now, sure, the Omicron can play some role. We could go back to March 2020 and talk about how there are hundreds of coronaviruses, the billion colds that we saw. I've got one right now, and I'm COVID positive at this very moment, and I've been much sicker than I am now, and I was out traveling. So this to me is not. I'm reminded of a set, and I'll get back to the market here in one moment. I'm reminded of two important sayings. There's this. Did you guys see the movie The Shawshank Redemption?
Yes.
It's okay. So it's a Stephen King short story, and the essential line of the movie from Andy Dufresne is get busy living or get busy dying. You're doing one of the two. And so what are we going to do as a people? And then, I would say that once again, I'd like to reference certain theological things because I think they have merit. There's this great line in the book of Ecclesiastes 9, 10, and 11. It says, the race isn't to the swift, battle isn't to the strong, time and chance happen to everybody. So go give it your all. Whatever you do it with your might. And I think that's the mindset. Those are the mindsets that we have to have as participants. Now, back to how the market works. I want to show you some data. So let me share my screen and look, EdgeMob. We don't put every single thing that we could show you in the platform. We try to simplify it because you can really get lost in the weeds. However, I do want to show you this. So here are data that we run internally. This is the S&P 500. It's the composite stocks, not the SPX. And so this is for the 5 days ended to the 26th. So through Friday, here's what the data showed. There was add this up. Here's active investment. This is stock picking, off 2%. Passive investment, indexes, ETFs, quants, off 9%. Add those two up. Now we're approaching 12%. Risk management, the use of derivatives, off 4%. You add all that stuff together, there was a 15% decline in the kinds of stuff that actually depend on owning equities. And what was the only behavior up last week? It was fast trading. Hudson River Trading,
those
Quant
algos.
Labs, exactly. And it was true in both the S&P 500 and the Russell 3000. If I home in on just Friday, which we can do by running a day-to-day comparative, I picked Walmart here as just an example. Look at the S&P 500 on Friday. The only behavior that increased proportionately day over day was fast trading. And it was a staggering part of the market. So I don't even have to wonder what occurred. I know what occurred. So this is why we say be very careful into those periods. If we look at what the broad market sentiment was doing into Thanksgiving, this is it. That is a long ski hill. By the way, our ski hills out here are wanting for snow.
Yes.
But here's a pretty slick slope. Do you want to be long equities on that slope? Well, not really, right? You would wait. You wait for the new month, new money. And now this may be the bottom. I don't know. I don't know. But I think this kind of condition sets us up for a period where the machines have a day to exploit the absence of demand and to influence supply and price and profit on volatility. The folks at Virtu, look, they're good folks. I'm not maligning these machines. They're merely taking advantage of what the thousands of pages of regulation all boil down to: continuous auction market. There must continually be 100 shares of stuff to buy and sell. And that trumps the actual existence of stuff to buy and sell. They can manufacture it. So the supply and demand cannot be trusted, particularly when investors are not in the market. So we set ourselves up for this big drop, but now we might have a very nice run. I'm not
Define fast money for me. Define fast money for me.
Right. So I actually did this for the readers this morning. I said, let me redefine what this means. What do we mean when we say fast trading, high frequency trading? Scott Patterson, a Wall Street Journal writer, back over a decade ago, he's the one who coined that phrase, high frequency trading, meaning it's being done at very high speeds. So what we mean is there are a set of firms, and there are hundreds of them, but about 15 of them execute over 50% of market volume. That is Citadel, Two Sigma, again, huge firm, Virtu, huge player, Hudson River Trading, Quant Lab, Infinium, GTS. By the way, Infinium, GTS, Virtu, and Citadel are the 4 designated market makers on the floor of the NYSE. They price all NYSE equities at the open. You can't use a customer order to price the NYSE at the open. At the NASDAQ, the whole market is a time priority market, but at the NASDAQ, there aren't designated market makers. It's an electronic order entry system. It's a market maker model, right? So they run 3 platforms. So who's going to be the best? Who's going to have the fastest, best bid and offer? High frequency trading firms. So fast traders are machines, the computerized traders who trade their own book, proprietary trading. Yes, Citadel runs a crossing platform. Virtu has an algorithm, has a router that will handle customer orders. But generally, when they're pricing, they're using their own capital, and they're trying to do it faster than everybody else in the market by being everywhere simultaneously and being as close to the servers of the exchanges as they possibly can be. So they can move faster. I use the analogy, it's like a football field where you remove half the defense and you have the fastest running back in the league and you let them run up and down the field. That's what happened on Friday. So that's what high frequency trading is, Joel.
Okay. All right, Tim. Also, you made a statement. You said like in the market. Like Dennis and I talk about different time frames. I mean, I'm always in the market. I mean,
Sure.
so like, you must have a separate portfolio, right? A very
Oh, sure.
long-term portfolio. Okay, because when you said you in, because there's no way that, with the sentiment and the mood, the changes in the market, that I can
Right.
move all my money. And I mean, it would be ridiculous. I mean, I wouldn't do it. I mean, the
Right.
transactions cost or whatever. So when you say in the market, are you talking
Right.
just your short term, your swing portfolio, a half a dozen stocks you're looking at from the long side or the short side?
Absolutely. I
Okay.
have my edge trading portfolio.
Okay.
Then we have managed accounts. We
Okay.
have, we have regulated accounts, long-term retirement accounts. We have non-retirement assets. All of
Okay.
those things are going to have. I have a lot of investment in private businesses. I put
Okay.
more into private businesses than public equities because of what I know. I know that I understand the market very well and how it works, and I know that it's subject to artifice and trickery. And so, but for my trading purposes,
Okay.
yes, for edge, with the whole point of edge is I want to take gains, not chances, right? So if there's something like this occurring, I'm likely to largely remove myself from the market unless there's something that I think is likely to move contrary to the market. I told the edge mob, you could look at the FANGs, you could look at Amazon. Amazon has a good supply demand balance. Amazon was actually up on Friday. So there will be things that work even in these conditions, but you have to be very selective when the whole demand side is working against you. So that's how to think about it. If you could pick just about any sector on Friday, look at communication services. Very weak demand side. Supply side's fine, but it ticked up on Friday. Cloud computing, weak demand side, high supply side. Clean energy, weak demand, high supply. Wouldn't be trading clean energy right now. Consumer discretionary doesn't look good. Consumer staples doesn't look great. Even COVID isn't great. That ought to be telling for us. If there's a whole rush of people out of the back to work trade into the stay at home trade, well, it doesn't show up there. Energy
Okay.
doesn't look good. So what does look good?
Yeah, exactly. What does
FANGs
look
are
good?
about it, right? It's the FANGs. It's even the FANGs had a little uptick in supply on Friday. See this right here? But the demand side's rising and the supply side is below trend. That would tell me those stocks, and they are 25% of the market, can carry the whole market to a positive start to December. That's my expectation. It could break down.
All right, so I'm seeing one of those scans there for the fives. Looks like the
Yes.
consumer staples. That to me is standing out to me a little bit, and I have seen some names start getting moving in there. Is there any on here that are standing out a little bit more than the others here?
Well, that's a great question, Mitch, because if you think that money's going to turn cautious or defensive, then you want to move into the big and stables, I call them. And so here, consumer staples is the primary place that you would find these. But this is a dynamic portfolio that will look for things that are likely to be low volatility hedges. So if all of a sudden everybody's concerned about this stuff going on and could stocks be volatile, what are you going to move into? Mondelez, Procter and Gamble, Waste Management, Hershey, ADP, stocks like that. And particularly, I would like ones that aren't more than 50% short. So that really points to Mondelez, Procter and Gamble, Waste Management right on the line, IDEX. That's an industrials, but that's what that's going to look for. Look for big stocks that are likely to be more stable.
Definitely, it looks like some values coming into play here. A lot of investors probably going to come back and start looking to see if we should start increasing our portfolios weighted a little bit more towards value. For a while there, it was growth really taking over a majority of those portfolios. So that's
Has been.
something I definitely think we'll be watching to see into 2022.
Well, and I don't disagree, Mitch. I think if the market begins to struggle, that's absolutely going to be the case. I would point out, but keep in mind, machines did this. High frequency traders did this. It wasn't rational human beings saying, "I want to hedge myself," but look how high the short volume was. This is taking the whole portfolio and saying what happened to the supply side versus the demand side. To me, this says that as we come into the end of the month, this is when month-end window dressing occurs. It's T+2. So we're in the +2 now, 29th, 30th. And then we start a new month. I look at this and say, at this point, if it's a read, if there's a 5-day read out of here, people parked some money in these big stocks into Thanksgiving for precisely what occurred. But then maybe in December, they're not going to stay there. We'll see. It'll be very telling. What does that new money in the new month do? Because all of us put money to work. Right? Did we change our asset allocations? I didn't change mine. Did you?
No.
So, Joel,
Love
to
it.
your
Love it.
to your long-term strategies, we didn't change our
On this
asset
news,
allocations.
you'll be pulling your hair out if you do
Exactly.
that. You
Exactly.
can't do that.
So if we didn't do it, did State Street, did BlackRock, did Vanguard, did Fidelity? I doubt it. So unless and until something significant occurs, I don't think this lasts. I think that the market will be okay. Doesn't mean at some point we're not going to have, it's funny, I talked to Spencer, a catastrophe. I said last week to Spencer, I said, right now in the data, I don't see a catastrophe. But it was a half-day catastrophe on Friday.
That's how it is. I mean, well, the fast
Right,
traders took
right,
over
exactly.
there, so we'll definitely be watching to see how that transitions today. Thank you for coming on, Tim Quast.
Good.
If you
You betcha.
guys out there
Thank
want to
you.
get Market Structure Edge, of course, download it, guys. You guys don't even need a credit card. Check it out. I definitely suggest it. And one of the things, like always, as traders, we're watching supply and demand. So thank you, Tim.
You got it. Have a good week, guys.